And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show. Welcome. Lots to cover this week. Although the broader markets were down, it really belied a lot of underlying strength that is exhibiting itself within the markets. So let's see where we are going to focus today. And as usual, we are going to go ahead and take a look at the broader markets, see where that drop, that 1.5% drop, has put the indexes and what we can look forward to into next week and beyond. We're also going to take a look at stocks that gapped up on news this week. And the reason here is because we are entering earnings season. We did see a couple of bank stocks come out with their numbers. And as you know, during earnings season, we will see stocks gap up and gap down as well. I'm going to share a couple of names in that vein with an eye toward uncovering how you can treat these stocks and what to look forward to as the stock advances out of that gap up that would indicate a continued upward move. From here, we're going to take a look at a couple of turnaround plays, stocks that are just turning positive on good news, what we can look forward to with those stocks as well. Also, we did see REIT and utility stocks among the only 3 positive sectors this week. So we're going to take a look at some names in those newer groups as they're beginning to join the rest of the markets. And then the continued move into small caps, although they did get hit today. For the end of the week, they were up about 1.5%. So a couple of stocks there as well that we can go ahead and take a look at. So let's go ahead and get started. Take a look at the S&P 500. We're looking at a daily price chart, and as many of you know, I pay attention to the index as it relates to these shorter term simple moving averages, particularly when we're in an upward trending market. We did see today's negative down almost 1%, but the index did find support at this upward trending 21-day simple moving average. So our uptrend is still firmly in place. We do have the RSI up above that net neutral 50, and the stochastics are also in positive territory. So our uptrend remains confirmed. Those that subscribe to my MEM Edge report will know that we have been really on alert as that RSI got up close to getting above that 70. So these are the kind of metrics that we pay close attention to that could point us toward a potential pullback. So let's take it further from here. As usual, we want to see underlying within these broader markets where the strength is relative to the weakness. And of course, always with an eye toward capitalizing on that strength. That's where you want to be putting your money to work. So here we are looking at those underlying sectors within the S&P 500. I've gone ahead and add an RSI. That's that relative strength indicator. Go ahead and update it. Each of these candle glance charts is providing you with 2 months of daily trading action. But again, up here in this upper left quartile, we are seeing where the strength currently resides. Healthcare was flat to down a little this week, but it is still up here in the forefront. Let's just take a quick look at that chart, and we can see that last week's explosive move really pushed this group out of a lengthy 3-month base breakout. A lot of that has to do with biotech, but it remains up there in the forefront. So I did a show with Aaron yesterday, Chartwise Women, and we talked about the fact that healthcare is no longer just a defensive area. There's a lot of growth and innovation taking place in that space. Well worth noting. Financials appear in the forefront as well. They were flat for the week, which means they outperformed the S&P that was down 1.5%. And again, we can see this nice gap up last week and a nice continuation rally. It's remaining in an uptrend, everything to do with these bank stocks in as recovery plays continue to point to less loan defaults. So financials up here in the forefront. Energy was up 3.2% for the week, and it added to last week's significant move. A number of the energy stocks on my MEM Edge report were up almost 10%, one of them up double digit. So we are continuing to see nice vibrancy in the energy space. Everything to do not only with that recovery play, but also reduced production outputs and other dynamics that are continuing to propel those oil-related stocks higher. So let's go take a look here at some of these weaker areas that, as I mentioned, are potentially beginning to turn. This is the real estate sector, XLRE. Take a look. It did have on that November 9th vaccine news, it had a nice gap up, which eventually did fizzle. We had a 2-month pullback here, but this week vibrancy renewed. So we're going to share some stocks there that are well worth taking a look at, because we're seeing a lot of high yielding, but also stocks in that REIT space that are really have been able to withstand the downward pressure from pandemic, and they have good numbers. They're starting to turn. Another area that we talked about was utility, up 1.1% this week. And take a look. So this week's action pushed the utility index up here above this 50-day simple moving average. Another area with some nice high yielders that you'll definitely want to, at the very least, be aware of. I'm going to pull up a longer term chart here of these utilities, simply to share with you the significant move that this industry group can have once it gets going. Again, with that, my MEM investment research, my biweekly report, we had a number of big winners during this mid-18 into throughout 2019 period. A lot of those same stocks are doing well right now. So we're going to take a look at that. And then as we move down, we can see technology is lagging. One thing of note, when you're looking at these sectors, you will want to have a good feel for the what the heaviest weighted stocks are in within those sectors, because it will impact. And Apple certainly is by and large one of the biggest names. Apple down almost 4% this week. Microsoft, another big heavy weighting within XLK, down 3%. There were other spots of weakness there that I don't know that we'll get into, but I will be covering in my report this week to those of you that are watching and subscribe to that MEM Edge report. So let's move forward, because we want to look beyond those sectors. We want to see sub-industry groupings within the various broader sectors. And I do focus primarily on growth, but I will go where that strength is. So I talked about oil being up there in the forefront, and financial, not certainly viewed as a growth area, but we have a number of big winning financial and bank stocks that had another good week this week as well. So again, that RSI descending order, and we can see, let's just take a quick look here, this XRT. This is that S&P equal weighted retail ETF. However, I will argue it is not indicative of how the consumer discretionary and retail area did. They actually underperformed for the week. I would argue this is a unique situation. CHWY, GME, just a handful of names are really helping to prop this particular ETF up. But let's take it a step further. I talked about biotech stocks, and they were up 2.2% this week. Lots going on here as far as FDA continued swift approval times, and also a lot of innovation going on. And it is not just COVID related, a lot of oncology, cancer related drugs and elsewhere. We're going to take a look at one of the best performing ETFs in the biotech space. And from there, take a look at some of the top holdings within that ETF so that you can, again, capitalize on this one specific area within biotechs that really is doing quite well. Talked about energy stocks. We would be remiss to not take a look at Brent crude oil, and we can see that it's up here now at 56. And the big move here, of course, last week was this oil move up above that $50 price, and we are continuing to advance higher. Of course, good news for those energy stocks. Bank stocks we did touch on, and down here we want to be aware of those weaker areas. And I talked about tech. This is the software index continuing to drift downward here, and we've seen that very evident with this software. This is IGV, hits a new high, pulls back, approaches prior high, pull back. So a bit of a theme here, but I will tell you there is vibrant underperformance within this group. There are areas and names that are outpacing. You want to be aware of those names because when the group pressure is lifted, those stocks that have been able to withstand this pressure will go on to greater heights. And again, that my MEM Edge report has a handful of those names that are really doing quite well. So let's take a look as we move on, because I do want to share with you some other areas of the market. I talked about taking a look at gaps up, but what I do want to do from here is go ahead and share with you some of these REIT stocks that have picked up over the last week. And then I'll share with you some of the dynamics. This first up is Simon Property Group. SPG is the ticker symbol. Let's just take a quick look here, and I'm going to share with you because a lot of my work not only is fundamentally driven, but I also want to see a constructive chart. SPG breaking out of this nice 2-month base. Take a look at the volume, nice volume characteristics on that breakout. RSI is positive. MACD has that nice black line up through the red. So a nice bullish downtrend reversal on the moving average, convergence, divergence. Both of these are momentum indicators that can really be quite helpful. SPG does provide a 6.4% yield. They do have commercial real estate, shopping malls. All of their properties are now open, and things are brightening up for SPG. Let's take a look at another bellwether, or certainly well known within REITs. This is Alexandria. ARE is the ticker. I wanted to share this with you. It does have urban office properties, but the company really has come through with numbers throughout this pandemic, double-digit revenues over the past 3 quarters. Their third quarter numbers, 40% year-over-year revenues. So the numbers are there. I'm pointing it out to put it on your radar. It did drop rather significantly here, but you're going to want to pay attention, because if we can break back above this line here, the pink line is your 21-day simple moving average. We are on the prowl for a resumption of this prior uptrend. Nice 2.6% yield. Let's take a look at AVB. This is Avalon Bay, and we can see some of the dynamics here that would capture my eye. They are the largest apartment REIT globally, and the company does have a lot in the way of massive free cash flow, and that is always positive as an ability to withstand potential defaults from renters, and then also invest those funds in newer properties during this period of depressed valuations. So AVB, we can see another stock that hit a near-term high. This is that vaccine positive news. Since then, it did trade sideways, but then sold off. What's attractive now is the break back above each of its simple moving averages. Your RSI is now positive, and we're just now poised to get a positive MACD. Nice volume characteristics taking place here. Let's take a look at just a couple of more names, because there certainly are other areas that I do want to make sure that we cover. AVB, 3.9% yield. And then this, I think I will leave it at this on the REITs. Tangier Factory Outlet, SKT. Take a look. The stock did pull back here, but it has reversed and since gone on to new heights. The talk here is that their retail sales numbers during the holiday period were are being viewed as exceptional. Of course, the concept that these outlet centers are outdoors, and they were very judicious as far as letting a certain number of individuals inside. All good news for sales there. It did break out of this nice base, huge volume, 5.7% yield for SKT. We're going to take a quick break. Lots more to cover. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my biweekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this biweekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge Report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. I did want to go ahead and share with you some of these stocks that are potentially turning around. In other words, reversing their downtrends. And we certainly saw a couple of those candidates among those REIT stocks, but this is outside of that area. Beyond Meat, BYND. When I'm looking at turnaround candidates among potentially growth stocks, I want to see a previous outperformance, period of outperformance. In other words, telling me that the stock does have characteristics that could potentially propel the stock higher when it once reverses its potential downtrend. The news here, the company is in talks. For those of you not familiar, they do produce a non-meat plant based product that has been well received, and the stock, as you can see, has broken back above these shorter term simple moving averages, nice volume characteristics. They are in talks with Taco Bell to produce or to provide their plant-based product to them, and that got the eye of Wall Street analysts, and the stock is potentially reversing. We're going to want to make sure it remains above these shorter term moving averages. Again, using history as your guide is just going to be the best way to go at all times, because going back to this prior downtrend reversal, as long as it stays above these simple moving averages and continues to trend upward, you are in good standing. Let's take a look at another potential turnaround, and this is one that I pointed out last week. So for those of you that missed this, I did want to share with you what occurred. This is Gilead, G-I-L-D. The company has spent a lot in the way of acquisitions, and analysts, Wall Street is bullish on their prospects for this year. So last week I did point out the fact that it broke above these shorter term simple moving averages. I'm bringing up again this week because this week's action was classic as far as a potential buy point. Stock had a pretty explosive move down here. It pulled back right to this upward trending 10-day simple moving average and is continuing to advance. Last week, I did talk about this blue 200-day being your next area of potential resistance, but by and large, the uptrend remains very intact. Another large biotech name, again, I did talk about this one last week as well, but I'm pointing it out as an educational point of view, Amgen, because last week we did get that break above these shorter term simple moving averages, and the stock really just consolidated here during the beginning of this week, formed a nice tight flag formation from which it has since emerged. Take a look at the volume characteristics on that continuation rally. RSI, MACD is now in positive territory. The company announced that they raised their dividend to 3%, and that was very bullish for Wall Street in the sense that the company has enough in the way of cash flow and a strong balance sheet to go ahead and raise their dividend. Let's take a look at what we are going to be on the prowl for longer term as far as a potential base breakout here at 255 could signal a nice continuation rally in Amgen. I'm going to share with you one potential. We did not cover this, but it was a turnaround attempt just to help you be on the lookout for, to note that that turnaround attempt may have failed. This is Workday, WDAY, and it had been a big winner for us earlier in the year. We have not gotten re-engaged with the stock. We can see that it had this this reversal, or really consolidation period, where it appeared to break out. But as the stock breaks below these shorter term simple moving averages, your volume is picking up, indicating the stock is under distribution. Your RSI turns negative. MACD now poised to turn negative. So that is a failed turnaround attempt. So let's go ahead and move on, because I want to share with you some of these gaps up. And of course, as I mentioned, this is with an eye toward helping you formulate a plan as we enter earnings season. You will see stocks, if they come out with good numbers, if they guide higher, oftentimes they will gap up, and that is very, very bullish action, if and only if. So I'm going to share with you those that have exhibited promising action subsequent to their gaps up, and I'll share a name with you that did not hold. So again, all with to help you formulate a plan. So we're looking at Eli Lilly, and the stock gapped up on news of their Alzheimer's disease drug. This was on Monday of this week. Huge volume characteristics. So by all accounts, very bullish. We did get a Tuesday pullback, but note that we had a really tough week, and Lilly has been able to withstand that. The stock is very much in a bullish position to trade higher. Let's take a look at some of the other dynamics here at play, because when a stock gaps up and in that process breaks out of a base, very bullish. Huge volume, another positive characteristic. We already had positive momentum indicators here, and the stock is continuing to trend higher. Let's take a look at another name that had a gap up. Those of you with my MEM Edge report will be very familiar with this stock, one of the top performers in the S&P this week. This is General Motors. The company did participate in the Consumer Electronics Show, normally held in Vegas, but virtual this year. And their CEO came out with very bullish news. She talked about their their commercial vehicle as being ready to be potentially rolled out. They've been doing a pilot program with FedEx, and it's really working out quite well. So that was one. The company did also talk about their flying Cadillac, if you can imagine, a single seat potential vehicle, but a lot of good news that has people continued and back into the excitement mode for GM, that is going both feet in on this electric vehicle play. So we had that nice gap out, gap up, base breakout on the gap up. You just can't ignore these really high volume characteristics. Again, outside positive characteristics on your momentum, and the stock very well may pause here, but definitely one that you need to take a close look at. Another name that gapped up. One thing you'll note this week, the stocks that really had the most momentum and certainly the higher returns were those that appeared at either a conference or were at that Consumer Electronics Show. It was very much that kind of a market, otherwise not very trending. It was very news driven. Bristol Myers, another drug company that was at that JP Morgan healthcare conference, which really each and every year does not disappoint in January for bringing out these stocks. Bristol Myers breaking out of a nice 2-month base. The company announced a $2 billion share buyback program. Very bullish. Also, we can see these outside momentum indicators in positive territory. Last up, I'm going to share with you a name that did gap up and failed. Again, to give you a sense of what to be on the lookout for. And it didn't entirely fail, but I will point this out. This is NIO, N-I-O. And the stock did have a gap up here on Monday. And when I say not hold, what I mean is the stock pulled back and closed the gap from that gap up that occurred. So historically, that will foretell that this gap up is not certainly as strong, that it may very well not carry on over the very near term. We can take a look back at this other gap up here in late June. It held the gap. The stock pulled back, but it remained above this gapped up level. So that's what you want to be on the lookout for. Let's take a look at some other areas because we are running a little bit shy on time here. I wanted to share with you the top performing biotech ETF, and this is one that we identified for the MEM Edge report going back quite a bit back here, and we've been able to capitalize on this nice significant advance from this period all the way up. So this is an innovative ARKG Genomic Revolution ETF. And what you can do is go to yahoo.com or ETF.com and uncover the top names in this particular ETF that's really driving it higher. There's a lot of innovation I mentioned to you that is taking place within biotech. Pacific Biosciences, PACB, I'm very familiar with this ETF, is one of the holdings within this ARKG, and we can see it's in a very confirmed uptrend. Any pullback to that 10-day is presenting itself as a buying opportunity. Another top holder within this ETF is TWST. So we can see these stocks are all in very confirmed uptrends. One other item I did want to mention is when you uncover these higher performing ETFs, go ahead and take a look. What are those underlying stocks that are helping to propel that ETF higher? Because you may want to invest in the stocks because they will, of course, they're not a collective basket. So these individual stocks will often highly outperform that outperforming ETF. So this is another holding FATE gap up, held another extensive nice move here, nice high tight flag formation. FATE is the ticker symbol there. So I did want to share that with you. And then lastly, I think we have a couple of minutes left. I'm going to share with you some small cap stocks that could potentially just be moving. Small caps have been really on a tear. Let's take a look at that small cap grouping. Really super sweet, nice outperformance there. So I'm sharing with you names that are not going to be quite as extended. They could be earlier in their advance. This is CASA Systems, CASA. They're in the telecom space. What you can do is go ahead and ask for that full quote, and from there you will go ahead and get information. It's a $600 million market cap, so it will be a bit more volatile. But what attracted me to this stock is that nice base breakout that occurred here. We can see that I talked earlier about that gap up on the base breakout, nice volume characteristics, and then also nice outside momentum, that black line up through the red, indicating a shift of that downward momentum. I think we have time for one other name in here, and it's CUTR is the ticker symbol in that healthcare products, medical products space, Cutera, CUTR, and they are involved in laser minimally invasive procedures. Again, it's 450 market cap. So you really would need to be comfortable with these smaller, with the smaller market cap size. It may present a bit in the way of volatility, not highly liquid, but a nice attractive chart poised here to break out of this base, positive RSI, positive MACD. I'm going to leave it at that. I hope everyone has a great long weekend. For those of you who have not already, go ahead and use the link below. You'll want to trial my MEM Edge report for 4 weeks at a nominal fee. Stay on top of these big performers. We had about 5 of the best top performers, top 10 in the S&P this week, and other indexes as well. So urge you to take advantage of that. Have a great weekend, everyone.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.